IVM.
One of the best financial decisions I have made recently is shifting all my credit card payments to credit. It's extremely easy and convenient. You're even reminded when your bills are due, and the app looks for hidden charges on your bills. So just pay your bills on time and stand a chance to win some amazing rewards. So don't miss out, download credit and get paid for being good. Folks, welcome to Paisa Vaisa, brought to you by Credit, the most rewarding credit card bill payments app. I'm your host, Anupam Gupta, B50 on Twitter. And this is the education loan special. We've covered education loans before, but today I have one of the largest players in this segment, Avanse Financial Services, and its CEO, Amit Gainda. We are going to talk about education loans, how they compare against other loans, how to get a good one, and much, much more. So don't go anywhere, folks. We'll be right back after this credit convenience break.
$100. That's all it takes to begin your journey with Bitcoin and Ethereum. No, really. With CoinSwitch, you can start investing in over 100 cryptocurrencies with just 100 rupees. On top of that, there are zero charges for deposits and withdrawals, so you can trade, buy, sell, however and whenever you want. All of this, plus their extremely intuitive interface, makes CoinSwitch the perfect app for beginners in the crypto space. But don't take my word for it. Just download CoinSwitch for free and try it out for yourself. If you'd like more information on cryptocurrencies, tune into a show about crypto with me, Rohan Joshi, my new adventure on IVM podcasts. CoinSwitch, kuch to badlega.
Welcome to the show. Thank you so much for doing this for our listeners.
Anupam, thank you. Very, very delighted to be here today. You're very gracious with your thoughts and words. I think it's an honor to be part of the show and be able to talk to our consumers through your platform.
That's very kind of you. Thank you so much, Amit. So let's start with a quick introduction and background to Avanse so that our listeners who don't know about it can know more about it. So tell us more about it.
So Anupam, I think before I even start with that, let me say our whole purpose of existence is really to find ways to democratize education and education lending. With that larger theme, what we've been trying to do here at Avanse Financial Services is to lay a roadmap where we build a non-banking finance company which is consumer-centric, very, very customer-centric, very agile in its action, is digitally enabled so that we are able to do more for our consumers. Of course, naturally, any organization would want to focus on also being driven on sustainable profit. So our aspiration in a very simplistic manner is to be a customer-centric, digitally agile, non-banking finance company, which is focused on market leadership while delivering profitability in a sustained manner and doing more for our consumers.
Great. So are you guys the largest, if I look at anything, whether, of course, outside of, say, the Credilas and the SBIs, the banks and the NBFCs, I mean, what is the right comparison and where are you on the scale? That's the way to
thank you for asking that, Anupam. Often the stakeholders, myself, have this conversation. I'll tell you what the Bureau says, and Bureau is a great benchmark to refer to, right? This is the India Credit Bureau data. They say we are the 8th largest bank and non-bank put together. And in non-banks, we are the 2nd largest by asset size. I think for the senior team and me personally, my view is that one should not measure only on size. One should eventually measure on holistically. Of course, size is a critical parameter. What is also important is to see profitability. And last but not the least, in fact, the most important is to really see what is your NPS, which is nothing but the net promoter score. So we are wanting to aspire to be winning across all these areas as we set the benchmarks for ourselves.
Nice. And you guys have been around since, when were you formed and how long has it been?
So we've been there, incorporated in 2013. Our current shareholding is 80% Warburg Pincus and 20% with IFC, which is an arm of World Bank. Warburg Pincus and IFC put together all would have roughly about $80 billion of investments. And both our shareholders are very institutional, long-term, if I may say so, sovereign, quasi-sovereign,
As good as
and
that.
have a formidable track record of building businesses,
Sure.
financial services and beyond.
Great. So let's talk about what's happened in the past. Amit, it's been a very tough year for schools. It's been a tough year for parents and, of course, for kids, and also for the people who operate schools, especially the ones who run these smaller private schools. But what are the key trends that you have seen in the loan industry, given that this pandemic and it's still going on, right? For a lot of schools, at least in cities, they're
True,
still closed. So,
true,
if we
true,
can just talk about that.
true. I think it's been a very, very, everybody knows we live in the VUCA world. It's been clearly a very, very tough time for humanity at large. We all understand the medical side of medical and humane side of impact of this pandemic. I think students, parents, both have been impacted. Having said that, I think resilience as a characteristics for Indians at large and students and their parents is also something that I have a lot of respect for. And we can see a very, very strong comeback after wave two. And I'll give a few numbers to support what I'm saying as well. I'll definitely try and cover the set of questions you really asked me, Anupam. So bear with me around that.
Sure.
Q1 FY19, roughly about 50 odd thousand students had gone overseas. Q1 FY21, apple to apple benchmark. And this is just when COVID came in, COVID wave one came in. We all remember the D-Day, right? If I'm not wrong, third week of March, the Janta curfew, where it started in a very subtle manner, right? And rest is history. The number came down crashing to 12,000.
Wow.
50,000.
And this is across undergrad and masters.
Everything. A large part of the diaspora, Indian diaspora, primarily focuses on masters, but this includes everything.
50,000 to 12,000.
50,000 to 12,000, and this is all reported data available across various industry platforms. But happy to share with you that post-COVID wave 2, the numbers, if you see, are very, very heartening, Anupam, if I may say so. It's back up to almost 40, low 40s, 41, 42,000, which is, if you ask me, very, very heartening, very encouraging, and which is why I said, I think students and parents, you have to have a big heart, right, to send your children overseas with all that is going on. But I think the world has adapted, the ecosystem has adapted, and there are various factors that have gone into it. I also want to bring in the dimension on seasonality. You are aware the largest part of the student population that goes overseas aspires to go for US. So not only Avanse Financial Services, but any education loan provider, bank or non-bank, a significant portfolio is catering to the US market. And US has a fall season where students are to be in the US on or by August or early September. So Q2 numbers are even more promising. And I believe there will be significant growth. If I have to give you some numbers, just to dimension this for you, our assets under management, if I take Avanse as an illustration and I give you visibility, we are now about 3,000, close to about 3,600, 3,700 crores of assets under management. Our disbursements for the period vis-a-vis previous year, same quarter, are up by 3x.
Wow.
And we are not alone. The market is growing at a significant rate. And I think all those who are catering to the segment are seeing the growth.
Okay. And if I was just to get an idea about your loan profile, as in what, a pie chart of which loans are for what purpose within education. You just mentioned about overseas.
So
if I were to just break it down.
Fantastic question, Anupam. It also gives me an opportunity to share with our listeners today here what we do. We have We cater to three large consumer segments. We are a pure play retail balance sheet with loan ticket size of single. Our student lending balance sheet average ticket sizes are only 15, 17 lakh rupees. Because we cater to both domestic and overseas. About 60% is US overseas. Another 25 to 30, I would say, is close to about close to 30% is overseas others, which is primarily catering to countries such as UK, Canada, Germany, Australia. These would cover about 80 to 90% of the segment called overseas others. And this is where largely the new trends which we were talking about earlier are also emerging for education beyond the United States of America. The balance 20% of student lending business or education loan business is for domestic. So if I were to give you an illustration on domestic, somebody who's wanting to go to Narsimonji or let's say the IIMs or to ISB for a management program would be somebody wanting to avail a education loan. Avanse is a diversified non-banking finance company. We also cater to the edtech business. Now we all know what is happening in edtech, and in fact, I would have covered it when I would have answered the question on the emerging trends. But just to cover your earlier point, Anupam, I would say the following: the growth in edtech is known and very visible to all of us, right? In last 1 year alone, if I take one illustration in the market, the amount of dollars that have come in chasing edtech is very, very clear. Those numbers are well spoken, well known to all our customers as well. Byju's alone, if I take one illustration, acquired, I think 8 or 9 recent acquisitions. Akash, Whitehead Jr. There are several other edtech players as well. Eruditus became a unicorn, and there are more in the offing, right? I would say we've also benefited with this trend and this emerging growth in the edtech space. We have about 8% of our assets in edtech, and we work with 150 education providers, manufacturers, marketplaces in the edtech business. Edtech business for us ranges from 50,000 rupees to 5 lakh rupees. You could have somebody in K-12, tutoring, self-study, hybrid. Hybrid is itself in a new trend, Anupam, where essentially the coaching is coming to your home. It's a mix of in-person and digital. Upskilling, working professional, wanting to go and upgrade their skills. Let's say an HR professional or an admin professional who wants to do HR now joins a program and goes for an upgrade. We are there to finance their requirement. So we cater in K-12, within K-12, tutoring and self-study, hybrid, vocational, upskilling, and that is about 8% of our total balance sheet. The rest of our balance sheet is in education institutional loans, where we are catering to CAPEX growth. And we are partnering in providing quality infrastructure and education at the grassroots level. We work in tier 2, tier 3, tier 4 grassroots of India with K-12 schools only. Our segmentation is very, very clear. So CAPEX requirement of K-12 schools in India beyond tier 2 is where we found our niche, and we have about 25 to 30% of our current balance sheet there.
Very interesting. You've got a pretty wide footprint. So I think, let's try and make this useful for our listeners with how the entire education loan works, right? I mean, it's a product, and a lot of, who knows, maybe some of our listeners are in the spaces that you occupy. So I think first, let's talk about how an education loan is, say, better than any other loan, right? Because this market was not exactly organized and formal, and when anyone had to take a loan for education, they, probably mortgage their house, mortgage their securities, stuff like that, or even pledge their gold. So if I look at these traditional ways of financing education, right, versus an education loan, let's start from there. Let's explain this loan product to our listeners.
Anupam, you are so right. let me start by sharing this story. So I've been at Avanse Financial Services since April 17, with the purpose of, like I said earlier, democratizing education and education lending, playing a small part as a stakeholder in the whole growth at the grassroots foundation level in the country. I've never been this excited, having worked in BFSI for close to 25 years. In my earlier avatars, I was fortunate enough to work with some great brands and build large, profitable housing, mortgage, MSME businesses. Every time I would speak to the end consumer, Anupam, the survey would say 20, 30, 40% were taking the money, except for housing, where it was for end use of acquisition of a new asset or a balance transfer. A significant number, as high as 30%, was largely for education or medical.
Wow.
Now, let's connect the dots. A large part of the consumer retail lending in the country that happens, which is today earmarked under personal loans or MSME, different lenders earmark their asset classes differently, but let's say a loan against property or a home equity or any such loan, including a personal loan or a business loan, a large portion of that is also meant for education. So how do you, if my child had to take a 50,000 rupee loan or a 5 lakh rupee loan, go to TIS or go to, let's say, White Hat Junior and do coding, or go to go for NEET in India for tutorial for NEET, or IIT JEE training. Let's say the child enrolls in Chaitanya, anywhere. It could be anywhere between 50,000 to 5 lakh. Whereas if my child chooses to go for domestic education in India, let's say to ISB, Fine Management Institute, will be anywhere from 10 to 18 lakhs. ISB or Narsi Monji, plus the living expense. So living expense a year will be again nothing short of 1 lakh to 2 lakh, depending on how I choose to stay, right?
Yep.
In a dormitory or otherwise. So what are the ticket sizes we are discussing? The ticket sizes we are discussing for domestic could be, let's say, 11 to 18 lakh on tuition fee in this illustration, plus another lakh to 2 lakh every year. So anywhere from 20 lakh to 30 lakh. The third illustration I'll give you is, let's say, in this same illustration, my child chooses to go to US for undergrad. That's $60,000 a year. Let's do the sums, 4 years. Yes. There could be a program at 30,000, 35,000. There could be a program even at $80,000 plus living expenses a year. Or let me take one final illustration, which is where the maximum traffic is, consumer flow is. Indian diaspora largely prefers United States of America. Within that, USMS STEM, which is Masters in Sciences, Technology, Engineering and Math, which will be a typical 20-month program in US, costing anywhere between 30 to 40 lakhs. Let's say 35 lakhs. Living expenses, travel, insurance, that's a significant amount of money. Now, what does this mean? That there are two choices. Either I take a loan or I use my own money, which is internal accruals. So I think those of us who are blessed enough to have internal accruals, consider that as an option. There are several others who are saying, hey, let me do leverage, take some debt and take an education loan. The way I would answer your question, for preventive dental, you don't go to your GP, right?
Yeah.
So for education loan, why should you take a personal loan or go to a housing loan company or a mortgage loan company? Go to a specialist. I'm not saying come to Avanse. Go to a bank, go to your existing banker, go to your non-bank of your choice, go to a digitally agile fintech player, wherever you choose, but choose a specialist is what I would say. And there are deep reasons behind it. I'm so glad you asked me this question. It gives me an opportunity to say what I love to say to our consumers whenever I get an opportunity. I think you have to go to a specialist. You have to see there are significant benefits of you opting for an education loan versus opting for a gold loan, a personal loan, or a loan against property for education as well, if your lender allows you, and if that is your requirement. If I have to list down the benefits for you, I think customized education loans allows you to do a lot more. Illustration. Let's take the same illustration we were taking earlier. 35 lakhs for US MS STEM. Let's say child goes to any university in the US wanting to do a course in data science, or let's say somebody goes to Waterloo in Canada and is doing a data scientist course.
Sure.
You get a moratorium, right? The study period, you don't have to pay. Now, of course, it adds up, the interest capitalizes, but it gives you a lot of flexibility. It allows a deserving student whose loan otherwise would have not been approved in an existing personal loan, mortgage loan, or gold loan. And that too in some of these asset classes, barring personal loan, all these are collateralized loans. Education loans can be collateralized or non-collateralized, as in secured or unsecured. Education loans will allow you to have the option to opt for moratorium if you so like, which means the study period. 20 months illustration I had taken earlier for the tenor of an average master's program, and another 6 months if you need, further extendable by another 6 months. So total put together 2 to 3 years you can avail a moratorium and then start paying. There are several other benefits. Customized products are available for you. You can choose. It's literally a bouquet. It's like going to a restaurant and choosing from the menu. There are various carded products available. As an illustration, let me give you one example. Banks do both moratorium and non-moratorium. Banks largely prefer moratorium products. Non-banking specialized companies, all of us, not Avanse, but all of us offer various products such as PI, SI, EMI. PI is partial interest, which means you could take a partial interest product, let's say paying only $100 a month, $50 a month. And then as you get your stipends, as you get your jobs, you can go for a full installment or an equated monthly installment, as it is more popularly called, known in the industry, EMI. We also offer our customers SI, which is simple interest, which means you pay the full interest, only the principal gets amortized, and you can start paying early as well. You have that flexibility and option available. I think there are other benefits as well. If you have to take a personal loan today, Anupam, it is from your parents' current income, which means the entire debt, entire leverage is going on to your parents today, which is not bad, which is totally understandable and acceptable, given Indian parents want to clearly stand by and support their children. But sometimes parents' income is not able to support the transaction, right? So what happens if you are a very deserving student, you're top of the league, but you're not able to get because of your current income, current family income? Now, that is where the role of a segment-focused education financing company becomes even more pivotal, Anupam. So, just as an illustration, we at Avanse do a very customer-centric approach. We actually look at the student profile first. Then we look at the course in the institute. When I say student profile, I mean academics. I mean, what kind of pre-test course came in. This is a COVID year where 1,600 universities have waived SAT, but that doesn't happen every year, right? So we look at SAT, we look at IELTS, we look at TOEFL, depending on what you are going for. Fundamentally, we will profile you and we will give you due credit if you are, there on the credit parameters from a student academic profile point of view. Then we look at the university and the course where you are going to. So if you are going to Harvard or any of the Ivy Leagues, or you're going to tier 1 platinum institutes, we will give you that extra benefit. Then we'll also look at the co-borrower or the anchor in the country, because you will obviously as a consumer travel overseas, right? So we have to have by structure, by design, any lending company has to have a co-applicant, co-borrower here. Then we look at the co-borrower. Unlike banks, if you are going to a bank, they will start with co-borrower, income and collateral. it's not that banks don't do unsecured. Banks also do secured, but they have very well-defined parameters of where they'll do secured, where they'll not do secured. So just to give you an example, we could do a 1 crore rupee unsecured loan depending on your credentials, and your credentials is totally dependent on 40 to 50 scorecard based variables, which you give us one time as part of the application. It is our endeavor to turn around your application in no more than 72 hours. In fact, we are able to turn around 90 to 95% of our applications in that timeline, because we have customer-centric student-based scorecards which have already been designed. For secured loans, we take about a week, given we have to do the necessary quality checks on collateral, valuations, volatility on asset, so on and so forth. Or in case it's collateralized by a bank deposit, then of course we have to do the lien marking process. So that is a little long tail, but you will appreciate 7 days is still very, very agile. Why are we so agile? Is because we are focused. Our only purpose is to meet your requirement within your timelines. Right? Vis-a-vis a bank which is focused on various other asset classes. So I think there are significant benefits. I will give you one illustration, which is, whenever I speak of this illustration, it gives me goosebumps, Student from rural India went on to do her engineering, went on to work for India's leading IT company. This is a real case study. Of course, I cannot and I should not name the student here. The day I got her letter, it changed the way I think and the way we work as a company. She wrote to us a letter the day she got a $1 lakh salary job. Wow. She had been trying for 5 years to get an education loan, fantastic marks in engineering, went on to work for a leading corporate in India, worked there for about 3 to 4 years, was trying for an education loan, declined from every public sector bank, only for a reason that the father had passed away. The mother's income was not supporting of 30 odd lakh rupee back then, with the rupee being at around 64 to 65 to the dollar. Of course, the depreciation with depreciation, the numbers are now changed to early 70s towards mid 70s. But a 30 lakh rupee loan unsecured was just not available to her. She had a good income, she had a good bureau score, but she didn't have a collateral, and she had only one co-applicant whose income was not justifying the exposure. Now, where did she fit in for Avanse? Very clearly, like I said, fantastic student profile, fantastic academic profile in terms of university and course where she was going. So we use deep learnings, and we use analytics to say what will be the future income once you pass out from these universities. And our specialization in education allows us to give better output, as such better risk scorecards. Happy to share with you, Anupam, that our credit losses in the segment have been less than 1% now for all 7 to 8 years that we've been in business. And just to dimension for you, this is the 1 lakh crore assets under management at an industry level. Not Avanse, banking, non-banking, everybody put together is 1 lakh crore plus, earmarked as education loan assets. Those who are taking personal loan, LAP, mortgage, and funding their children's education or their own education is incremental to this. And all loans greater than 10 lakhs catering to overseas have been performing very, very well, are sub 100% for everybody.
I like that statistic. It just reminds me of the fact, you said 1 lakh crore, right?
Correct.
1 lakh crore is what, 15 billion? And the US education loan market is $1 trillion. That's like half the size of our economy. But anyway,
that is what the demographics of India does, right? That's the
I'm just talking absolute numbers out
here.
Yeah, I'm just talking absolute numbers out here. So are you done with that part? What became, so you gave the loan to that student, right?
Yes. So we gave the loan to the student. She went to we gave her an unsecured 30 lakh rupee loan. She went to the US, fulfilled her aspiration and dream of doing her master's. She passed out. She wrote a thank you loan. She also prepaid.
Wow.
That's okay, which is fantastic. We are happy you're doing well in life. You want to reduce your debt. We wrote her a thank you mail back because she gave us an opportunity. to learn. She gave us an opportunity to reinforce for us that we are here for the purpose of democratizing education and education lending in the country.
Sure.
See, what is our mission statement, Anupam? Our mission statement is saying, if you are a deserving student, you should be able to fulfill your academic aspirations with access to education. Financing should not restrict you from going and living your aspiration in India or overseas on education. I think so. Your question allowed me to share this story. Is what I would say. I would urge our listeners to go and take the loan from any education financing company, bank or non-bank. Not take from somebody who doesn't specializes in the product. And I tell you, almost all banks offer.
Sure. So, folks,
almost several non-banks are also in the place. See, it is the same thing, Anupam, right? You go back to the subject matter expert. Working with the subject matter, my final submission to your question would be, work with the subject matter expert. You will gain in the process.
Fantastic.
I would say.
Yeah, I think that's a great insight. So, folks, it was a very long answer, but it was a very long and insightful answer to the simple question of why education loans. And Amit just gave us an entire perspective on almost every segment that you can think of. There will just two more questions before we go into this. Before we go into a break, Amit, quickly. You mentioned prepayments, right? So, do you guys accept that? And how does that work for me? If I'm working, if I'm getting a stipend, how does that work? And I can repay the loan then.
So, Anupam, first and foremost, let me say, yes, simple answer is yes, we accept prepayment, we accept part prepayment, you get a stipend, you get a bonus, you want to anyways pay down, you want to redeploy your money or asset class differently. So let's say you didn't get that big fat bonus, you just want to redo your asset class. You made a lot more money investing in equities and you want to pay down. You can prepay anytime. You can part prepay anytime. It works in a similar way. I think full respect to our regulators. The law of our land says any consumer loan you can prepay anytime. There are well-defined policies around that. We also allow our customers to get benefit whether they've taken a partial interest loan from Avanse or whether they've taken a simple interest loan from Avanse or an EMI loan from Avanse. We will allow you to part prepay under all scenarios. So the flexibility is for you to opt at any point of time.
Okay. And last question before the break. Are there education loan platforms or aggregators, right? And, do you recommend we use them? Do they provide a valuable service? What are these aggregators like?
So, Anupam, I think I did already cover this in a different way earlier. I would say always go to a subject matter expert. There are clearly platforms, aggregators. There are domain experts who have created niche here. There are individual leaders who are doing this. There are people who've corporatized it. There are people who've been doing this for 3 decades, Anupam.
Wow.
There are people who are doing it I know people, honestly, I didn't know them till a few years ago. We had heard, read, seen on Google. So one way to answer your question would be, you're asking me what Google can answer, but I don't think that is the value add that I can bring here. I would definitely go to the domain experts. There are aggregators, digital aggregators. You can look them up, but we work with several of them. In this category, we have 800 partners who we work with. So the distribution in this business is where I have all respect for, Anupam. And I would say you can choose anyone, whether you choose a digital aggregator or whether you choose an education consultant. Trust me, the value you will get back from them is immense. So do opt. Who to opt, I think our listeners know better.
Sure.
I don't think it will be fair for me to take 1 or 2 names.
Sure.
There are lots of people doing fantastic work in this area.
Fantastic. So, folks, on that note, we'll take a great convenience break right now. On the other side, we're going to get into numbers, right? How do these loans work for you? We're going to take examples of how loan sizes are, interest rates are, EMIs, and all of that on the other side of this break. Don't go anywhere. We'll be right back.
Hey everybody, it's been another great week on the IVM Podcast Network. On Wars and Warriors, Air Vice Marshal Arjun Subramanian takes listeners on a trip with the race to Dhaka and some of the most crucial moments from the lightning campaign of Bangladesh. On Think Fast, Varun and Suchita drop some hot takes on NFTs, music, and the rise of social commerce. On Ikaduka Economy, Abhinav Trivedi and Dr. Bharat Junjunwala, author and ex-professor IIM Bangalore, discuss war and its effects on our daily lives. On Shunya One, we spoke to Alok Goyal. He's a partner at Stellaris Venture Partners. We discuss why SaaS works well for India. And on All Things Policy, the Takshashila folk discuss Australia's anti-trolling bill aimed at making social media platforms safer, but perhaps a little less private. Do follow us on social media. We're IVM Podcast on Twitter, Facebook, Instagram, and LinkedIn. And also do check out our YouTube channels. We have a number of them. You can get them on ivmpodcast.com/YouTube. And remember, if you're enjoying this show, or any of our other shows for that matter, please do tell a friend. It really does help us spread the word. And finally, we'd like to thank our sponsors for the network this week: Cred, Bank of Baroda, CoinSwitch, Kuber, Intel, and Oxfam India. Thank you so much for making this possible.
And welcome back to this episode of Paisa Vaisa. My guest, Amit Gainda of Avanse. Amit, let's take an example. I don't know, but you help me with this example. Let's take your most commonly given out loan, right? What is the loan size? What is the kind of interest rate that you charge? What is the EMI, and how does the entire process work for the person taking the loan?
Sure. So let's start by simply saying, what is an education loan? Correct?
Yeah.
It's a sum of money which is borrowed to finance primarily your higher education, secondary education or higher education. There are two categories. One is where you are taking, let's say, for domestic education within K-12, or you are taking the loan for higher education overseas. Anupam, like you prompted me, I'll take the same illustration I was taking earlier, where our listeners and the Indian consumers largely prefer to go, which is US. Masters, Sciences, Technology, Engineering, and Maths. There are some emerging trends there now in areas of arts. So it's no more STEM, it's now also becoming STEAM. Wow. Sciences, Technology, Engineering, Arts, and Maths. Average ticket size, depending on where you would go, would be 30 to 40 lakhs, 35 lakhs. Of course, there will be added expenses by way of travel. You may need a new laptop, insurance, vaccination charges, and I'm not talking about Corona. The local laws, you have to be compliant to the local laws, so on and so forth. You will have the option to opt for an EMI product, a simple interest product, or a partial interest product. Let's take one illustration here. I would say the loans, by the way, from tenor point of view, loan tenor point of view, could be anywhere between 10 to 15 years. Most lenders will offer you 12 years. Some will offer you 10, some will go all the way up to 15 years. Rate of interest could vary on your credit profile. At a broad level in the industry, rates could be anywhere around upwards of 10%, north of 10%, I would say. There is always some variation, both sides, depending on the risk profile of the end consumer. So collateralized loans typically will be at a discount. Unsecured loan will be at a premium. Your bureau score is another important factor, and so on and so forth. If I have to take a 40 lakh rupee illustration for an EMI on a 15-year tenor, and I didn't realize Anupam will ask me this, so I'm doing some ballpark numbers. Listeners, I'm going to round this off. You have EMI calculators anyways available on Google, on our website, on any lender's website, it's available. I think typically you would be paying about 45,000 rupees.
That's a number, yeah. So you're talking about 10% per year
Roughly,
loan for a 40 lakh loan size and a 10-year kind of a time frame.
Correct.
You're saying about 45,000 roughly mota per month is what you'd be paying, right?
So Anupam, there is one illustration which I just signed off earlier today, which is a 50 lakh rupee illustration at 11%. Let me give you the exact number. The EMI there will come to about 57,000 rupees. But that's if you take a equated monthly installment. Alternatively, if you would have taken a moratorium with a partial interest, that will naturally capitalize the loan. As such, your EMI, when the EMI starts 2.5 to 3 years later, depending on what you opt for. In this case, the customer had opted for 3 years, given the study period was 23 months and took a 9-month window beyond the study period to say, hey, I may take some time to get a job, which is a very real situation in the VUCA world we all live in. In that case, the EMI we had offered at 11% was close to about 80,000.
80,000. But that's because you're taking a freeze, you're taking a moratorium. So it's marginally high to that extent.
Correct. Now, so why do we do this? Only to customize solutions for our customers. And like I said, we don't want your current income to restrict your academic aspiration. Right? Have I answered your question, Anupam?
Yeah. Of course you have. Of course, yeah. I was just interested in how do people usually give security? I mean, because this majority seems like an unsecured market, right? Because you're taking a step in the dark.
I'll give you an industry view. I think the trends are changing. It used to be primarily secured about a decade ago to the level that significant portion, 60-70% used to be secured. The trends are now changing. I would say a significant proportion is now becoming unsecured. And I think as any retail consumer lending product gets commoditized, this is a natural life cycle to follow. We've seen where was housing 20 years ago, right, Anupam? Or where was mortgages lab 10-15 years ago? Infrastructure status to housing led to democratizing of housing for all. Of course, the governmental support at a thematic level on the agenda on housing for all, the infrastructure status to housing gave low cost of capital access to lenders, and as such, the benefit got passed to consumers. So at some point of time, I'm sure that will also happen for education. It fits in well with the overall NEP policy theme also, I think, which is very, very progressive overall. Our regulators, our government has been very, very progressive in taking that view. Coming back here, I would say...
Okay, that's interesting, Amit. So I think that, that explains... I was just asking in case someone has that kind of security with him, right? Because you're taking a 50 lakh loan, it's a long-term commitment, and you're 25, 26, you've completed your graduation, you've probably worked for a couple of years, you've probably built up a small savings pot of, 5, 10 lakhs maybe, and that's still not enough, right? So I was just thinking that if this person was to go back to his parents would probably have to mortgage the house, right? Because 60 lakhs is a big number. Even if you take 50 lakhs or 40 lakhs, you'd probably have to pledge your gold and stuff. I was just wondering that how is that trend playing out? And it's good if it's unsecured, of course. And what kind of interest rate differentials are there between a secured loan and an unsecured loan? Is it like 8% and 10%, 10% and 12%? How does that work? General.
Let me start with the latter part of your question first. I think the pricing arbitrage between a secured and an unsecured, depending on what your requirement is no more than 50 to 100 bips. It's definitely not 200 bips. It's more, I would say, south to 100 bips. So typically would be anywhere between 25 to 75 bips is how I would put it. The other way to look at it is, like I was saying a while ago, very, very clearly, significant portion of the loans now are determined by your credit. So your student profile, your academics, your pre-test scores, is your IELTS upwards of 6.5, 7, 7.5, gets you a lot of weightage. Is your GRE upwards of 1300, let's say 1320 versus a 1280 or a 1300 will bring in a lot of weightage for you, right?
Sounds like I'm applying to a college itself. The way that you're assessing every parameter, it looks like I'm actually applying to, I've already made one application to get that master's degree at a pretty, hopefully at a reputed US college. Now I'm getting assessed.
I'll tell you, Anupam, I think what we want to do is, if we believe that these parameters add up for your risk profile to stand stronger, the benefit of that better credit should go to our consumers. So your pricing, to your question, is clearly lower for secured by about, like I said earlier, 50, 75 bips, is also better for you if your academic profile overall, including the college stream where you're going, is of a better category. Naturally, an Ivy League program to a non-Ivy League program will be priced differently. Similarly, in domestic in the country, IIMs and ISB will be priced differently vis-a-vis a tier 2 management program.
I get.
Significant portion of the loans are now unsecured, and with the intent that we should be able to enable more and more consumers. Like you were saying, not everybody has a debt-free 60 lakh rupee collateral available to avail at a 50% loan to value, or let's say a 70% loan to value, a 1 crore property for a 50 lakh rupee loan. And we understand that. We clearly understand that. I am increasingly seeing these trends change, where more and more companies, lending companies, banks and non-banks, are thinking consumer. And rightfully so, right?
Sure. So let's wrap up now on some practical tips for our listeners, Amit, right? And let me take maybe 3 specific segments out here, or I don't know, maybe the tips for finding a good education loan provider is actually the same. Okay, so help me out here, right? Instead of maybe looking at, say, someone who's doing a 26, 28-year-old who's doing his master's in the US, okay, probably the parent of an 18-year-old who's doing an undergrad in the US, and maybe someone who's doing an MBA from ISB, okay? If I look at generally these 3 categories, right, I'm guessing that they are large-ish categories from your perspective. What would you tell them that this is what you should look out when you go out looking for an education loan? What would you tell them? Point number 1, point number 2, maybe a checklist.
Sure. So first and foremost, any loan is debt. Evaluate, and this is common across all the 3, right, Anupam? What would I say to my daughter? What would I say to my niece? What would I say to my customer is not different. I'll be very honest with you. Do you have the internal accruals? If you have, how much of that you want to dip into and how much debt you want to take? Be responsible in selecting the quantum of the debt is the first thing I would say. Thinking consumer, and I'm not thinking lender right now, right? Lenders think risk. Rightfully, it's their job to think risk. It's their fiduciary duty. But we also have to think what works for the customer and then find the balance, wearing both the hats, right? Eventually, it has to converge. So don't over leverage yourself. Do a lot of research. Work with the domain experts, including doing your own research to understand what is in it for you. From whether in the city where you are going to where will you stay, what will be the living expenses, what is the law of the land, what are the regulations, what vaccines you are supposed to have, what insurance coverage you are supposed to have. Understand all of that, right? What are your career prospects? IRR. So Anupam's one of the most favorite thing people look at is IRR, which is rate of return. I would say pursue high quality education, and IRR will be an outcome. That is what I would say. From a lender's point of view, and the 3 categories you took one category of domestic education as ISB as an illustration, which was category C. You took
US undergrad and US masters.
Correct. So they are 3 very, very different in their nature, especially the undergrad. Undergrad US, like we were saying, the ticket sizes are anywhere around $50,000-$60,000 a year with living expenses added. That's a significant corpus, right?
And it's a 4-year course versus a 20-month course for
Plus the employment prospects post that, you will have to, in all probability, you may have to do masters for you to be employed in a manner you want to be employed, right? Eventually, you are going for high quality education with growth prospects and job prospects overseas or India.
Yeah.
You're coming back to your family business, right? Which is a very different case. Then you are
Obviously.
anyways not looking for an education loan.
Sounds like a tough loan to get already.
Correct. So given the ticket sizes of these loans, generally the way this loan works for banks, non-banks, and what I would advise to you is, other than the generic set of inputs that I've already given, I would say this will be typically a secured loan backed by collateral, which could be by way of residential property or commercial property that you already have, or you're given the average age will be 17, 18, 19 years here. 18 years, you've just passed out of school, you're aspiring to go overseas. The income, the collateral will belong to your parents.
Yeah.
So your parents' current income, your parents' current collateral, it will be a secured loan. There will be a study period moratorium option available, but majority lenders offer only EMI products in the category, given this is based on current income. That's their rationale behind it. Again, at Avanse, we have a bouquet of products available. We not only extend this loan backed by collaterals, we also offer you this on bank deposits. So if you have an existing bank deposit, but you don't want to use all your internal accruals for this, and you want to leverage your future income, then we have some attractive options available for our listeners here. I would say that.
Okay.
So that's a customized offering where Avanse is different from some of the other lenders in the market. For US undergrad, we've covered. For US masters, taking the same illustration, this would be all put together anywhere between 30 to 40 lakh rupee loan plus living expenses. There are various options available for you. Whatever works well for you, opt for that. Whether you opt for a full moratorium, partial moratorium, like I said earlier, a partial interest, a simple interest, or a full EMI based loan on your current income, on your parents' current income, or on your existing collateral, or completely unsecured, we have a full bouquet available.
Okay.
In fact, Anupam, for Ivy League, our loans go upwards of 1 crore unsecured.
Sure.
For premium schools in the US, we also do loans up to 60 to 70 lakh rupee unsecured. We have a very competitive suite available for our listeners and very attractive offers available for them. But like I said, be responsible in selecting your leverage quantum. We will also do our diligence at our end and support your decision in the process.
Okay. Last question to you, Amit, is a tricky one. I mean, you said that you had less than 1% or less than 1% NPS or NPS or whatever you choose to call them. But what happens when an education loan goes bad? And especially in times when people lose their jobs, your chances are less. Though, of course, if you're fresh out of college, you got your MBA, you probably already got a job, and the chances of you losing an entry-level job are less. But just for our listeners to understand how a default works, what is that scenario like? Last question.
So let me give you two very simple answers. Even when unemployment rates were up, they went as high as 13, 14, 15% in post-COVID wave 1 in the US. Default rates for us remained very low, and largely they were low, single digit, less than 100 piece, primarily because of superior credit selection. I would give the credit of this to our consumers only. Consumers today, Anupam, are very responsible. They understand this impacts their bureau score. And unless there is a medical exigency, a death in the family, or loss of job, like you said, generally, we've seen very responsible credit behavior. Consumers understand it impacts their India score, credit score, it impacts their global credit score. It will impact their ability to have a good credit performance both here and overseas. What do? We work with the consumer. So we offer insurance as an optional product in the eventuality of an unforeseen event such as death or accident. We give the consumer a choice at the time of origination itself to opt for additional insurance. Some opt, some don't opt, both happen. Some also have existing insurance which they lien mark. But we advise to them, please do cover it for your additional debt. So I think that also works for the consumer benefit is another dimension I want to give through you to our listeners.
Sure.
They should cover for their incremental debt, whether they take from their current financier or otherwise. Last but not the least, what do? You work with the customer in the guidance framework that is there by our regulators, and it is very well defined. So you engage and you understand their reason and you support them in the defined framework, and you collect defined policies, and we stay. So Anupam, I think let me say the following: we engage with the customer, we understand what situation they are passing through, we try and assess in a very objective and fair manner that is it an intent related issue or is it a situation related issue. A death in the family of the income applicant leading to an exigency situation on the loan will be very different scenario from an exigency scenario of a loss of a job due to COVID or otherwise any such situation. Sum and substance, we understand the situation, why the customer is unable to pay, and we offer solutions to the customer well defined by the regulatory framework, and collect back in a responsible manner.
Fantastic. And Amit, last question, where can our listeners reach out to you? I mean, your website has enough resources, I assume, right?
So absolutely, we are omni-channel. Consumers can reach out to us through our website. They can write on our social media page, www.avanse.com, or they can reach out to us on our service channels, which is WeCare, WECARE @avanse.com. We also work through close to 800 plus education consultant, counselors, aggregators, and platforms. You can also reach out through one of our distribution partners. We'll be very happy to find ways to meet your aspirations.
Yeah, and there you go, folks. And the credentials and the descriptions are all given in the episode description of this episode. I know this has been a long episode, but believe me, it's a very useful episode. This is September, October, November, December is typically when what happens at this time, Amit? I mean, there are people who've already started their terms in the US colleges and even in India, but there are a few people who are applying for early applications in the US.
Yes.
Is this not about the time?
You are bang on it. People are already doing their pretest and application process starting. I sometimes joke about it. Those of you in Maharashtra and southern part of the country will relate a little more with Ganpati Bappa Visarjan begins the application process for fall 22. So students, listeners, wish you all the best. Season's greetings, and of course wish you all the best in fulfilling your academic aspirations.
And
thank you.
Thank you. And on that auspicious note full of hope, that is a wrap on this episode of Paisa Vaisa. My guest, Amit Gainda, CEO, Avanse Financial Services. Amit, thank you. You've taken out for almost 2 hours of your time. Thank you so much for doing this for our listeners.
Pleasure. Thank you. I hope it's of use in terms of them deciding to work with the right education partner. And thank you, Anupam, for bringing this forward for our listeners and customers.
I'm sure it will be. And here is the credit privilege tip of the week, folks. Take care of your loan agreements, whether it's a home loan, whether it's a personal loan, whether it's a credit card, terms and conditions, folks. Read them line by line, whether you're going through a loan aggregator, whether you're going through a distributor, whoever you're going through, the interest rate of the loan, the repayment tenure, the EMI, the default, the penalty. A loan is an important product, whether it's in the form of a credit card or an auto loan, car loan, two-wheeler loan, home loan, whichever it is. Please pay attention. Things change a lot in the loans that are offered by banks and NBFCs, whoever else that you're applying to. Rates change, fixed rates, floating rates, etc., etc. So please be careful before taking that loan. And that, folks, is your credit privilege tip of the week. And listeners, if you like this podcast, don't forget to check out other interesting podcasts on the IVM network. You can listen to us on the IVM Podcast app or ivmpodcast.com. You can also follow us on our social media. We are IVM Podcast on Twitter and Instagram. And if you want to reach out to me, I'm your host, Anupam Gupta, B50 on Twitter.
No material on the show should be considered as financial advice. The material on the show is for informational purposes only. Please consult a financial advisor before taking any investment decision.
IVM